Hello, and welcome to Pro Trader Strategies Market Commentary for Tuesday, February the 21st. Hope everybody had a great President's Day weekend here in the United States. We had a bank holiday, which meant the markets were closed. But my name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We do have a lot of economic data this week, and today it is going to be the week of PMI, and it comes in the form of flash PMI. Now, here in the United States, this Purchasing Managers Index on the flash side isn't as important as the ISM, which is the Institute for Supply Management, but we still are going to be getting some of those data points. But across the pond, this flash PMI data is some of the most important data points for purchasing managers. All right, so and or the economy, because the Purchasing Managers Index really gives us a forward-looking data point, because they are really the ones that are determining whether or not they're seeing robustness in the economy. And anything above 50 is expansion in the economy. Anything below 50 is a pullback in the economy. So this is a pretty key metric forward-looking. It's not a lagging indicator like we see with some of the unemployment numbers and things of that nature. This one's more forward-looking, so it's the one that I look at the most for quite some time and for all intents and purposes. Anyway, so let's get this on. Starting off in Europe, we got the French final CPI, which is the Consumer Price Index, came in right in line with expectations at a negative 0.2%, was expected to be negative 0.2%. French flash manufacturing PMI pulled back just a little bit, but still above that 50 number, showing expansion. Came in at 52.3, was expected to be 53.5. Then we also got the flash services PMI for the French, came in at 56.7, above the expected 53.8. Then we got German flash manufacturing, came in at 57.0, was expected to be 56.2. Then the flash German services PMI came in at 54.4, was expected to be 54.6. Then across Europe, for the most part, for all the other ancillary countries in Europe, we got the manufacturing PMI coming in at 55.5, was expected to be 55, and the services PMI for the European region came in at 55.6, was expected to be 53.7. So, all intents and purposes, those all above expectations for the most part, and they were all well above 50. So that is showing a pretty strong economy across the pond. Then here in the United States, we have, that's one thing I wanted to mention, is throughout this week, we're going to get a lot of FOMC fodder from, we got Kashkari speaking today, and then throughout the week, we also have the FOMC minutes being released later on this week as well. But here in the United States, we've got our own flash manufacturing PMI came in at 54.3, slightly lower than the expected 54.7. And then our flash services PMI came in slightly lower than expected at 53.9, was expected to be 55.8. Again, those numbers are a little bit lower than what was expected, but above 50, which is still showing expansion in the economy. Then later on today, we have Fed FOMC member Harker speaking, and later on today, we get some Australian numbers, which like construction work done and things of that nature. So that comes out well after our close. For the most part, overnight session data points. Then on to the overall markets. We've got crude oil pushing higher today, almost up $1 on the day, and well above the value area high that I've been talking about. That's been acting as resistance. It kind of pushed above that and has unabated to the upside for $1 gain on the day, up trading at 54.77. So it's definitely going to be trying to test this 52-week high of 55.24. Keep in mind, we also have crude oil inventories later on this week, but it's probably going to test that number before that data point comes out, and it doesn't seem to be abating despite the fact that we have record amounts of crude oil out there and all kinds of supply coming through the pipeline. Then on to gold futures, down on the day with the equities really cruising higher today, but it is holding that 200-day moving average as we speak. It did blast below that as the markets really started rallying, but it has worked its way back, treaded water above that line in the sand, and we are very close to having this 9-day moving average cross over that 200-day moving average. It's pretty significant, shows more of a bearish sentiment in the overall market. The real test is when the 50-day moving average crosses over that 200-day moving average. It's a little bit more significant of a rally. All right, so keep your eyes out for that to happen if you are a gold bug or bull in the gold. Then we've got bonds down only about 6 points on the day, despite the fact that we're seeing a big move higher in the equities. Bonds are just stuck in this trend right between 153, 154 area and the 149 area. So that is where we are kind of stuck. We're going to see a lot of talk out of the FOMC about what they are planning to do going forward. They are not inside the window where they cannot really talk about Fed policy. So we could see a lot of interesting conversation coming out of those speeches that they're going to be putting out and give us a little glimpse into what they're thinking going forward. This is what I was talking about with the Dow Jones Industrial Average up over 100 points right now and making a new historical intraday high. Of course, we probably will see a historical daily settlement as well, as it is pushing quite rapidly to the upside as we speak. NASDAQ, same situation, up 20 points on the day, and again, having a record intraday print, and probably will have that record intraday settlement, despite the fact, or despite having any other economic data points coming out, and barring something catastrophic, I foresee this really pushing higher because it's broken above just about every resistance level now. And with the E-mini S&Ps up 13, almost 14 points, let's call it, and again, same situation with the new intraday historical high. Then this is the breakdown of the E-mini S&Ps. Overnight trading was pretty quiet for the most part. Yesterday, or this is the Monday E-mini S&Ps, but this is, as soon as we opened the market, gangbusters to the upside. We're seeing a little bit of a profit taking from the longs off of that open. It's probably what we're seeing really here with this just bit of a pullback. We'll have to see whether or not the rest of the day continues to rally, but I would have to say it's probably going to hold up, especially with these ISM numbers coming out across the pond and here in the United States, showing pretty good economic data. On to the things that I've done. Halliburton, talked about this on Friday. I was trying to get out of this trade because it was a little bit better than the 50% of max profit potential on this trade, and so I was able to get out of it on Friday. So I had on the March 57.5 put spread, and it was a debit spread. I paid $1.25 for that, got out of it for $2.01. Can't get that good a pricing as of right now with the overall markets pushing higher, and it's slightly in positive territory, but you could still get out for my 50% of max profit rule. So because I paid $1.25 for it, the max profit potential on that is $2.50, but to increase by $1.25, take 50% of that, that's about 60 some odd cents. So you can probably get out for right around $1.85, $1.90, which puts that right in line with that max profit potential. So if you jumped on that trade, then it is right there at the 50% of max profit still. On to Qualcomm. Now, Friday's webinar went off really well. Thank you guys all for joining. We had a ton of people in that room. Some people might not have even been able to get into that room because it was full. If not, go to Pro Trader Strategies, sign up for that webinar. But having said that, this is a trade that I did in regards to that webinar, and it's on the broken wing butterfly. The beauty in this trade is that you can add a synthetic short put spread into this strategy, into the regular butterfly, the regular long put butterfly, and you create a credit. And by creating that credit, you limit your entire risk to the upside. So with Qualcomm coming out with better than expected earnings and had a massive sell-off, we've seen that bottom trough out. The market's pushing higher. I could easily see it want to stay within this range right here or go up and to cover this gap that it made on those earnings. So I wanted to limit my risk to the upside, but having said that, I could see this trending sideways for the next at least 20 some days. So that makes it perfect for this strategy. If the market rallies up unexpectedly, then I get to keep that 14-cent credit that I put this trade on for. And if it stays right here, then I get to get my max profit potential of just over $1,000 or over $1 for this trade. So what I did to build this out was went into the March contract because it only has 20 some odd days left. So I like to put this trade on with less than 35 days, and went into the March, like I said, and bought the 54 puts, skipped those 55 puts because that's where that embedded put spread is, and then sold 2 of the 56 puts, and then bought the 57 puts to create that butterfly for a credit of 14 cents. Now, the market rallies up, I get to keep that 14 cents. It's a defined risk strategy, so it is appropriate for an IRA, and it makes it good because I did add a little bit of risk to the downside, but I've eliminated all the risk to the upside. So that's the beauty in this trade. I don't really see it coming back off and testing those lows necessarily. All right, so go to protraderstrategies.com, sign up for that, and you'll get all the other rules that I wrap around that trade on how to set it up on implied volatility, percent, and everything else. All right, so that's all I got for you guys today. If you can't take that, take it easy.